Hi, and welcome to this week's Symax Fintech Market Insight. As usual, it's broken down into 4 parts. So let's first start by having a look at what happened last week. As usual, we start with our disclaimer. So trading involves the potential risk of loss of capital. It's not suitable for everyone, although hopefully it is for you. When it comes to leverage, just be careful because you can lose substantially more than that initial investment. Everything we include in here is just purely for educational purposes. We're not trying to provide you with advice, we're just trying to help you prepare, understand the markets better, to help you make better decisions. But of course, if you are looking to invest or trade, that has to be your decision. And before you make that, you should consider your financial situation, your level of experience, and your risk appetite. And of course, on your risk capital, you're prepared, but more importantly, can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before risking your capital. Okay, so when we look at the highlights from last week, stocks were up again, gold was up, treasuries were lower, oil lower, nat gas lower, and then Friday Israel restarted their offensive against Hamas in Gaza. Inflation data generally was lower than expected, and there was Chinese investment bank that banned bearish research. Okay, so when we look at the actual data for last week, actually, before we do that, let's just talk a little bit more about what happened last week. So, stocks rallied again. I suppose you'd have to consider at the moment they're technically overbought, and data obviously isn't really supporting these current valuations. But, who can argue against the market? Just remember it's December now, so strange things can happen. Gold was very strong. Helped gain a little bit by a weaker dollar. Treasuries saw the 10-year yield drop again. That went down to 4.3%. And of course, that was despite Powell commenting that, overall inflation target remains out of reach. And obviously, until that is achieved, the rates are not likely to drop. However, the Fed is going to be flexible in their approach, whatever that means. So oil moved lower, even as OPEC plus they settled on voluntary cuts. So obviously other members weren't keen to reduce their quotas anymore. And of course, in November, when we look at sort of some of the numbers, we saw stocks up around about 8%. Gold was up roughly 5%. The Treasury 10-year was down from 4.7% to 4.22%, and oil was down about 7% as well. Surprisingly, nat gas was down around about 20%. Now, I'm in the UK, and the temperatures have definitely dropped. Northern parts have seen a little bit of snow. Whether that is going to sort of move across and impact Europe the same, I don't know. But just remember, stocks are high, so I doubt whether that's going to have any immediate effect on gas prices. And of course, the US average wages year on year are up 4%. And of course, we had that ceasefire between Israel and Hamas. However, Israel recommenced their assault on Friday. So inflation data generally surprised, coming in lower than expected. And of course, that's a good thing. So so let's have a little look at some of the data now and see what happened there. So new home sales, they were lower than expected. They came in negative 5.6%. The Dallas Fed manufacturing index was negative 19.9. The house price index did creep up though. It was 0.6%. So that was a little bit higher than expected. The Richmond Fed manufacturing came in at -5. That was expected +1, so there was a big miss there. And GDP beat on the upside as expected, really, 5.2%. You know, as I keep saying, the US by far have the strongest economy, and I'll cover that in the macro part. PMI was came in line. Manufacturing was 49.4. And then when we look at the PCE, the core came in at 0.2% month on month. That was as expected, which was 3.5% year on year. Again, as expected, so they was pretty much in line. And then initial jobless claims came in just below expectations. They came in at 218,000 when expectations were 220,000. And then the Chicago PMI was higher than expected. That came in at 55.8. Although the ISM PMI was lower than expected at 46.7. Interestingly, the prices paid was higher than expected. They came in at 49.9 when they were expected at 46.2. And yeah, so I mean a little bit of a mixture there. Inflation still moving in the right direction, but slowly. Lower oil prices, lower energy prices in general are going to give that a little bit of a helping hand. Moving on to the EU, business climate came in -0.39. Consumer confidence was -16.9, which was in line. Economic sentiment was 93.8. Industrial confidence was -9.5, which was lower than expectations, although services sentiment was 4.9, which was higher than expected. That was only expected at 4.3. So CPI came in at 3.6% year on year, and core 2.4%. That and then harmonised, looking at 3.2%, which is -0.1% year on year when expectations were -2%. So you know, some good, some bad there. Okay, so you know, it's just a contrast between economies at the moment, isn't it? And you know, the data is reflecting that. So okay, let's move on to Germany. So consumer confidence was -27.8, and then CPI. So CPI came in at -0.4% month on month, which was 3.2% year on year. Now, when we look at the harmonised, that was 2.3% year on year, which was lower because expectations were 2.7%. Now, retail sales came in at 1.1% month on month. Unemployment just crept up just slightly to 5.9%. And the PMI was higher than expected. That came in at 42.6, but you know, obviously still deep into contraction territory there. Okay, not too much data came out in the UK. So shop price index came in at 4.3%, and consumer credit came in at 1.29 billion. Now that was expected to come in at 1.5 billion, so that was a little bit less than expected. Then if we move on to Canada, GDP came in at 0.1% month on month, and that's -1.1% annualized. Then China's PMI is a little bit mixed, lower than expected. So manufacturing came in at 49.4. and non-manufacturing 50.2. That was expected at 51.1, so that was a little bit lower there. And manufacturing PMI came in at 50.7, which was higher than expected. Was expected only to be 49.8. Okay, then moving on to Canada. sorry, I've lost myself. So Switzerland, ZEW came in negative 29.6. Retail sales year on year negative 0.1%, which was lower than expected. And then on top of that, we had GDP come in at 0.3%. That was only expected to come in at 0.1% quarter on quarter. But year on year, that gave 0.3% when it was expected to be 0.5%. And the PMI came in at 42.1. So New Zealand left rates unchanged at 5.5%. As expected, really. You know, most central banks are just on a wait and see, just looking at the data. You know, as I say, lower energy prices are going to be useful just to sort of help to bring that inflation down. And of course, consumers are probably starting to cut back, although saying that we're coming into the Christmas season. So New Zealand business confidence was 30.8. Okay, so Australia retail sales came in at negative 0.2% month on month, which was lower than expected. CPI came in at 4.9%, which was lower than expected. That was expected to come in at 5.2%. And then finally, Japan industrial production was 1% month on month, which was higher than expected, but it gave a year-on-year figure of 0.9%. Retail sales came in at 3.7%. And then consumer confidence 36.1, which was higher than expected. The unemployment rate was just dipped lower actually. It came in at 2.5%. And then PMI manufacturing came in better than expected at 48.3%. So a bit of a mixture there from last week. Obviously markets had a fairly active week. And you know, we're now in December, so as the month goes on, you're going to see less traders active in the market, so lower volumes, but it's also going to mean that we're going to see higher volatility, or we're very likely to see that anyway. So just be warned of that. So just moving on to highlight what we do as a company. Obviously, the majority of you are probably familiar with that, but there's always some new people viewing these. So it's just to give you a little bit of an insight into Symax Fintech as a company. So apart from the YouTube, we provide daily newsletters, which include sort of global headlines, global news, and then as an option, there's fresh chart levels and pivot points each day. Then when it comes to sort of workshops, you know, if people are looking to get into trading, then our sort of introduction to trading is a great one. Trading for beginners. And then for others that are already trading but have got gaps in their knowledge or their trading skills, then we can help you with those as well. We do offer 1 week courses. They can make you feel competent and confident in just 1 week. Does it make you a trader? No, but does it give you the foundations on which to build your trading career? For sure. And you know, if you've got that inner trader, I will find it. And of course, now you have the option of going for one of our new course, which actually includes a free trading challenge attempt as well. And then if you're really serious about making trading your career, then our comprehensive accredited masterclass is the one for you. It's designed to provide you with all the knowledge and trading tools required to navigate any market conditions, and also any asset class. And the next one of those starts on the 19th of June. So you've got a week to register if you're interested. Then trader mentoring, you know, some people don't want to go through courses, but they do need help still, and I can certainly do that. Consulting, we consult to companies around hedging, FX and commodity exposure. And then, of course, we provide you know, a mass of educational content that can be to individuals, exchanges, to brokers. And as I just mentioned, if you're looking for that funded account, you know, maybe you're a bit sort of undercapitalized, or possibly you just don't want to use your capital, then there's the opportunity to go through the challenge and hopefully qualify for a funded account through one of our partners, Nordic Funder. If you'd like to contact us, it's info@symaxfintech.com. Any questions you'd like to aim directly at me, it's chris.tubby at Symax Fintech. Sorry, go back to that one, christubby@symax-int.com. Just get so used to the fintech part. And of course, look forward to seeing you in the second part.